The opinions and suggestions expressed on the following program are solely those of the participants and are not necessarily endorsed by KRMG, Cox Media Group Incorporated, or the program sponsors. This following program is sponsored by Causeway, LLC. Information in this broadcast is not intended as an investment, tax, or financial advice. Matthew Moore is not a licensed investment advisor and speaks solely from his experience and opinions. All information in this broadcast is for entertainment or educational purposes only. Matthew Moore, Causeway, LLC, and Cox Media Group Tulsa are not responsible for the success or failure of any person's investment decisions or purchases. Matthew Moore, Causeway, LLC, and Cox Media Group Tulsa makes no and expressly disclaims all representations, warranties, and guarantees with respect to this broadcast and its sponsors. Investing in any market is inherently risky and can be financially dangerous. Invest at your own risk. Gather knowledge in the world of cryptocurrency right now on 102.3 KRMG, Tulsa's news and talk. Welcome to Cryptocurrency with Matthew J. Moore. Matthew is locally based right here in Tulsa. Questions, comments, concerns? Call 918-460-5764 or send us an open mic using the KRMG app. Now, here's Cryptocurrency with Matthew J. Moore.
And welcome to the show. Good Sunday evening to you. My name is Russell Mills. Pleasure to be with you. We are live and local tonight in the big city of Tulsa and what has turned out to be a lovely Sunday afternoon, and looking forward to some great weather this week. And of course, the holidays really getting rolling with Thanksgiving, and we got a lot to be thankful for. But I'll tell you what, we brought you some news last week about FTX, the world's second largest crypto exchange, and its abrupt and pretty much complete collapse, and what that has done to the industry. It has rattled a lot of cages. Well, we're not shy about discussing that kind of stuff, and the discussion is being led by this guy. He is the one who founded this show, so they named it after him. Cryptocurrency with Matthew J. Moore. His name is, Matthew J. Moore. Hey, Matt.
Hey, that's right, Russell. Yeah, welcome back to another epic episode of America's Bitcoin-focused radio show, where we recently have found that truth has been sometimes stranger than fiction. This has been a monster of a story, and last week we covered the FTX story that has literally impacted not only the world of cryptocurrency, but also many other parts of society, and I don't think the contagion is over just yet. And that's why we're doing this episode once again on this story with some more details. And as we suspected, this story just gets worse and worse and deserves multiple episodes of coverage as it unfolds. With billions of customers' funds now up in smoke, continual fraud seems to be the theme of this story as it unfolds. But to help me unwrap this gift that just keeps on giving is my favorite Canadian with the Twitter handle known as BTC Plebeian. He is a returning guest, but for security reasons, we will just call him Sean. Sean, I know you're on the line. Welcome back to one of America's only radio shows dedicated to Bitcoin. Please introduce yourself to the audience.
Hey, Matt. Yeah, thanks for having me on. I'm just a Canadian Bitcoiner. I'm a pleb. I've been in Bitcoin for about 5 years now. I'm back in Canada for a visit right now, but I'm actually in the process of moving to Tulsa. I've been on the show a couple times before, and happy to be here breaking this FTX fiasco down with you guys.
That's right. We have successfully lobbied for Sean to move to Tulsa, so another asset added to the city, so super excited about that. But for those of you who missed the last episode of our coverage on this story, please take the time, go listen to it, and it will help you better understand what is unfolding here and will add more context to today's broadcast. You can find it on Spotify, Apple Podcasts, Google Podcasts, and KRMG.com. But to summarize the last show and to share a few new points to this FTX story, here is what you need to know so you have a little bit of context. One, like Russell was saying, the second largest cryptocurrency exchange in the world, known as FTX, collapsed, and the $32 billion operation is now in bankruptcy, along with its trading arm, Alameda Research, plus an additional 130 FTX Group companies. And two, Sam Bankman-Fried, the founder of FTX and Alameda, had a back door, out of all things, in the books and was moving $10 billion of customers' funds to Alameda to leverage trade, with about $1 to $2 billion unaccounted for. And according to a recent article from Forbes, it was recently found out that Sam had Alameda Research dish out, get this, $4.1 billion in personal loans to him and three other executives at FTX, with $1 billion of it just for him. And according to Fortune.com, this entire operation was being run internationally in the Bahamas by Sam's friends and ex-lover, all in their 20s and 30s. What was also shocking is that the majority of the net equity in Alameda was actually FTX's own centrally controlled and printed out of thin air token instead of, let's say, something like Bitcoin or some other government currency. Sam and his crew had unusually tight relationships with key players at MIT, Stanford, and the SEC and Congress, essentially giving them favor over other industry players when it came to many issues. Many of these ties coming from previous working relationships, family, and love affairs. And during this last election cycle, Sam Bankman-Fried was a mega donor, giving to both Republicans and Democrats in key positions, eventually making Sam the second largest donor to the Democrat Party, just behind George Soros. And although it is currently pure speculation at this point, according to an article from CoinDesk, back in March, the Ukraine government partnered with FTX in order to funnel crypto donations to help fight the war with Russia. And according to a Fox Business article, this has raised some red flags for some lawmakers in Congress, with many now calling for an audit on how U.S. federal aid was used by the Ukraine government. Now, Sean, currently, this is a story that we know that, is currently unfolding and seems to be this ongoing saga. According to the new FTX CEO, John Ray, who also helped clean up, get this, Enron, right? Out of all situations, this guy, he's seen a lot. And he mentioned, he goes, I've never seen a failure of controls and compliance as bad as FTX. Sean, what do you say about this? Is this the most, what's the most shocking thing about this story?
Yeah, there's so much here. It's hard to pick one thing. I would say that the most shocking thing right now is just the sheer size of the situation. I think a lot of Bitcoiners are using the nicknames scam, bankster, fraud for this guy for the past year and a half. We all knew that there was something fishy going on here, but even I was expecting something of this scale. This is just something that I don't think anyone expected it to be this bad.
Yeah,
it's
I know.
So surprising that he was able to get away with it.
No, it really, really has. And we had Charlie and Andrew in last week, but you know them. And I asked them, last week whether they thought this was kind of like a story of maybe incompetence, maybe some malice or corruption, or maybe a little bit of everything. I don't know. I know this is all still unfolding in real time, but what do you think this was? Was it just incompetency?
Well, I'll say that that's certainly how these leaked text messages he's sending out with people.
Oh yeah,
are you talking about
him? Are you talking about the Vox article?
Yeah, I mean it's happened several times now, and they do tend to make him look incompetent or like he made a mistake, and I'm just absolutely not buying that. That's for sure. He knew exactly what he was doing. You don't accidentally steal $10 billion of customer deposits.
Yeah, and like we talked last week, what advice would you give somebody so they don't become like the people who, lost their shirt in this? I mean, we talked about it last episode, but give us your take on this. How do you protect yourself from getting involved in something like this?
Yeah, well, this is the thing about Bitcoin, right? This is the talk I gave at the Tulsa Bitcoin meetup. I think it was back in February. Bitcoin offers a unique opportunity to self-custody your assets. Any securities or dollars that you hold with a bank are really just liabilities held by a third party. And Bitcoin in self-custody is the only asset that you can really hold. It's kind of like the equivalent of physical gold. And so, this is all really just a big learning lesson for everybody. It's unfortunate that it had to hurt so many people. It would be nice if people could learn this lesson somehow without the pain. But ultimately, this is going to be a really powerful motivator for people to take self-custody seriously.
It's a great point. And recently there was $1.5 billion in Bitcoin that was moved out of exchanges in the last week due to this. And, this could become really interesting when it comes to, leverage and liquidity in the marketplace. But, a lot of people are saying, hey, Matt, I get the whole idea of self-custody is the best way to protect yourself. But, a lot of these big institutions and these big players who've got, billions of dollars that want to enter this space, they don't really want to self-custody. What would you say to them? We got about 2 minutes before break. Is self-custody, since that's our message, is that going to prohibit growth to the space?
Well, frankly, I don't really care if institutions come in. I think Bitcoin is for people to avoid theft through inflation, risk of counterparties taking advantage of them. So I don't care so much if institutions come in. I would say there's a potential bigger concern looming here with this DCG issue with the Grayscale Trust. It's completely absurd that they're not proving their reserves right now. It's extremely easy to do. There's no security risk whatsoever. And so I think, there's a lot of institutional allocation to GBTC. And if that turns out to have any measure of fraud in it, that's going to push institutions even further out of the game. And so I think that's a much bigger issue than FTX, to be totally honest with you.
Yeah, it's really interesting because as this is all breaking, a lot of people are saying, well, watch out for the quote of, hey, everything is fine, everything is good, just go back to business as usual. That's usually a big red flag. So it's going to be interesting to see how this all unfolds in the next couple of weeks. But we gotta run to break. And I just want to remind you guys, if you want to learn more, if you want to catch up on past episodes, or if you want to contact me, you can go to mattjmoore.com. That is Moore with 2 O's, mattjmoore.com. And when we come back, we're going to dive more into this FTX story with Sean because, man, we got a lot more details to cover.
Yeah, and, we're not the only ones looking at this. Trust me, the federal regulators are looking at it going, should we be getting involved or more involved? A lot of crypto traders are saying, well, some regulatory clarity would probably be really helpful and might have helped avoid some of this situation. We'll dive into some of that coming up. You're listening to Cryptocurrency with Matthew J. Moore on 102.3 KRMG. Welcome back to Cryptocurrency with Matthew J. Moore. I'm Russell Mills. Today's topic of conversation, the implosion of FTX, the second largest cryptocurrency exchange on the planet, formerly, because now it's pretty much dusted. I think they're trying to reorganize, but boy, what a mess. Meanwhile, the Grayscale Bitcoin Trust is struggling with the fallout, as is a lot of the industry. And here to kind of break down what some of this means for us, including us who just want to hold a little Bitcoin personally, is the namesake of this show, Matthew J. Moore. Hey, Matt.
That's right, Russell. Yeah, we want to welcome everybody back to this show. I mean, this is going to be a monumental show, just like last week. And this might be one of the biggest financial frauds to ever take place, not just in the world of cryptocurrency, but I don't know, possibly ever. But if you missed the first part of this show or last week's show, you can always find us on Spotify, Apple Podcasts, Google Podcasts, and KRMG.com. And in order to get a bigger picture of this ongoing FTX story or scandal, like I like to put it, I would highly encourage you to listen to last week's show. And today on the line to discuss the story even further is my favorite Canadian with the Twitter handle known as BTC Plebeian, and he is a returning guest, but for security reasons, we're just going to call him Sean. But good news is we've got him coming to Tulsa and moving here for good in the near future. So, Sean, part one of this show has been shocking, but let's continue down this black hole known as the FTX scandal. Are you ready to keep on digging?
Oh, yeah, let's go.
Let's do it. All right, man. Well, here's some new information we got recently about FTX and Alameda's relationship, the trading firm or the trading arm of FTX. Both companies supposedly were separate entities, but both were also owned by Sam Bankman-Fried. We already know Alameda was given users' funds through a FTX backdoor. We also know that these billions of dollars were being used for leverage trading by Alameda. However, according to the new CEO, John Ray, Alameda had a secret exemption from FTX liquidation protocols. This is a process in which traders, if you don't know, traders who borrow money to place bets on the exchange would automatically have their collateral liquidated if they made some bad bets or if it turned south, right? Well, the revelation that was recently found out is that in a court document, it showed that Alameda held an advantage over everybody else when making these kind of risky trades. You could essentially call it maybe like a God mode or a cheat code because they themselves would never get liquidated even if they made a bad bet. So that would explain why Sam's lover, the CEO of Alameda, Caroline Ellison, was often praised for being some kind of like genius trader. And what I found interesting is there's this clip or an interview that she was being asked about her trading methods and what she uses for risk management. And just take a listen to this audio clip from the YouTuber Elio Trades. It's a clip of Caroline Ellison talking about her trading activities.
Let's take a look at the absolutely horrifying interview that came out of Caroline right around the time of the Luna collapse.
Yeah, absolutely could pull it off without my math degree. Use very little math. Use a lot of elementary school math. Being comfortable with risk is very important. We tend not to have things like stop losses. I think those aren't necessarily a great risk management tool. Trying to think of a good example of a trade where I've lost a ton of money. Well, I don't know. I probably don't want to go into specifics too much with that.
Not using advanced math, not using stop losses, trying to think of a big trade they lost a whole lot of money on, looks nervously at camera. This is horrendous.
Yeah, I mean, this explains a lot. Sean, to me, this 20-something-year-old CEO, Caroline Ellison, seems like, well, maybe she was faking it with these new revelations due to this cheat mode that she had. What do you think about this new information?
Yeah, well, it's pretty clear that these guys were absolute frauds. Honestly, one of the most staggering things about this whole thing is that FTX was making a lot of money. There's no reason. So what that means is that Alameda was losing even more than that. They were just in trading fees making many millions of dollars a day. And so that means they were transferring not only those profits, but also customer deposits over to Alameda and losing them. And that's just, it blows me away the scale of the loss here.
Oh,
and
yeah.
So that can only be explained by just severe incompetence.
And they didn't even know how many employees they had on the books, too. I mean, like, what? Well, we'll move on. But with billions of dollars of customers' funds being essentially used inappropriately and billions more being issued as personal loans to FTX executives, there is now a call for lawmakers from both political parties to symbolically give up donations from FTX executives. According to a recent Politico article, Congressman Kevin Hern, who represents the Tulsa area, is one of the lawmakers who has voluntarily given local charity donations that equal to the same amount that he may have received from FTX leaders. Now, Sean, with Sam being the second largest donor to Democrats and a contributor to both parties at large, do you feel that people should follow Congressman Hern's lead here? Should the politicians give up the donations that they got from the FTX executives?
Yeah, I mean, I think they should. I think that's a great example to lead with. The only thing that I would say is they should be potentially returning the funds to the FTX deposit holders that were defrauded. Like, these are not necessarily wealthy people. A lot of these people are just regular folks trying to avoid inflation, trying to find somewhere to put their savings where they can rely on them not being devalued year after year. And so this might have been, just single working moms with $5,000 saved up, depositing them on exchange and buying some Bitcoin. And those people need to get paid back, and they're the ones who are really getting hurt here. And so I would love to see all these politicians that raked in these huge donations, which essentially were customer deposits just being handed out to politicians to buy them off.
Yeah, Sean, I couldn't agree more. And both you and I know that this event has probably solidified some new Bitcoiners who will focus only on self-custody in the future, which we are a fan of, and also steering many people away from speculating on altcoins and leverage trading. And, here's a question for you. I mean, due to the current monetary system, the way it works, this is, the inflation and the wanting to get yield and returns. The current system kind of encourages people to go farther out on that risk curve. Would you agree?
Well, it absolutely does. Yeah, it actually basically makes it mandatory. If you basically the U.S. dollar's lost about 80% of its value over the past 35 years. Yeah. So if you're just a working person and you just want to save, earn more than you spend and save for retirement, you can't just hold U.S. dollars because you will not have enough money to retire. So you have to go out and buy things like real estate and stocks and bonds and Bitcoin and, a number of other things, basically just kind of playing this casino, trying to find ways to avoid inflation. And, yeah, it's just really unfortunate. Inflation is causing working people to push out on the risk curve, take risks that they don't necessarily want to take, and get burned.
Yeah, that's right. Well, we got to run to break here. And next segment is segment 3. We're going to cover some new information about some other shady reputations in FTX leadership. It gets really juicy, so I'd encourage you to stick around because we're just getting started, baby.
This story really does have everything, doesn't it? Crime,
Yeah.
sex,
Yeah, there
shock
is.
value.
Yeah.
You know, if we find any headless bodies, in the basement of FTX, we'll have hit. We'll have hit every cylinder. All right. Well, whatever happens, we're not going to blush. We're not going to shy away. We're going to tell you about it right here. So stay tuned. Quick check up on the news, and we'll be back with more of Cryptocurrency with Matthew J. Moore. You're listening to it live and local on 102.3 KRMG Tulsa's News and Talk. Welcome back to Cryptocurrency with Matthew J. Moore. I'm Russell Mills, and I do appreciate you hanging out with us, and I know Matt does too, even when we're tackling the tough subjects. And this one, as I mentioned before the break, this one's got a little bit of everything. If you've not been following the collapse of the FTX cryptocurrency exchange, go ahead and Google FTX and just sit back and enjoy a few hours of deep reading, some of which is going to confuse you, some of which may well alarm you, but you could cut all those corners and just sit back and relax and let Matt explain it all to you. And here he is, Matthew J. Moore. Hey, Matt.
Yeah, you're right, Russell. We really do try to explain this in a way that people can wrap their heads around, and we try to summarize it in an appropriate way. If you missed the last few segments, we've been chatting, like I said earlier, with my favorite Canadian and soon-to-be Tulsan. He's an OG Bitcoiner, original gangster, if you don't know what that means. But for security reasons, we're just going to call him Sean. But we've been discussing the new revelations about this FTX scandal and how deep this black hole goes. And if you've been listening to the past segments, then hey, you already know this story and what's unfolding. But if you missed the last few segments of this show, then go back and listen to it. Once we get this up as a podcast form, you can find it on all major podcast platforms and krmg.com. And I would also encourage you to listen to last week's show as well, because, this is basically part 2 of our coverage. Now, Sean, I know you're on the line. Let's change gears here. Let's talk ethics here, because obviously we know that the founder of FTX, Sam Bankman-Fried, has a laundry list of horrible stuff that he's done, especially when it comes to customers' funds. And just recently, a reporter from Vox.com received some direct messages on Twitter from Sam. And this reporter has now published these direct messages. And what was revealed was that this guy truly had no moral code other than being an opportunist. And in one of the messages, the reporter asked him, literally, spot blank, "You were really good at talking about ethics for somebody who kind of saw it all as a game with winners and losers." And he replied, no joke, get this, he replied with this: "Yeah, I had to be. This is what reputations are made of to some extent. I feel bad for those guys who got effed by it, but this dumb game that we woke Westerners play, where we say all the right shibboleths, and so everybody likes us." And that was a new word for me, Russell. Do you know what that word means? Shibboleths?
No. I'm going
He's
to tell you I don't.
He's going to look it up while we continue.
I will.
But Sean, are you shocked to hear these comments about his just Sam's regard towards ethics? Do you feel that, Sam had this coming for him anyways?
I would say I'm shocked that he was so irresponsible to let that leak, but I'm certainly not shocked that he said it. That's exactly what I thought he thought for the past year and a half while he was saying all that stuff in public. I think we're almost at the point in society where, or I hope we are, where we start understanding that these virtue signalers are actually signaling that they're bad people. If you're spending your time out there trying to make people like you and going way out of the way to try to make yourself look like a good person, it's probably because you have something to hide. And hopefully we can all get past this soon, and everyone kind of, if people stop buying it, then there won't be any reward to pretending.
So, Russell, did you find shibboleth? Do you know what that stands for?
Well, yeah, essentially shibboleth is like a position or a statement or a truism that is held deeply by people who have a certain belief, but other people kind of look at it and go, well, that's just meaningless.
Huh. Okay.
So
all right.
It's a matter of perspective, I reckon. So he's basically saying you're uttering the empty phrases to make yourself sound like you're doing the right thing.
Gotcha. Okay. Well, not surprisingly, we know that Sam didn't have, I guess now, the best moral compass, but take a listen to this other clip from YouTuber Elio Trades as he kind of lays out a few points about Sam's co-founder and chief regulatory officer. A lot of shady stuff here.
As we're about to dive into, we'll find out that SBF had not just Caroline doing crazy things, but he actually had two co-founders that have an extremely shady and very unclear past. Stuff that apparently investors like Sequoia, Paradigm, Tom Brady, Kevin O'Leary, some of the most prolific and diligent investors in history didn't know about.
Where did he come from? He was a washout from Jane Street. When anyone tries to pin SBF down on where he made his money, you can't get a cogent answer. You needed real money up front in the place on this country crypto arbitrage to make big money. No one in their right mind would ever give you the money. So who funded this trade for you?
Normally when people start companies, they get venture capital money, and those venture capitalists own a piece of it. Did you get venture capital money?
Not for Alameda. And what we ended up doing was basically cobbling together lines of credit and other things from various sources, trying to sort of snowball and be able to build on ourselves.
You can't get a real answer. And his partner is a guy named Gary Wang, and no one can find on Gary Wang.
Now, this part I actually looked into. The only thing you see of Gary Wang on the internet is a picture of his back looking at a computer. Pretty much, you have one of the biggest, most influential partners in FTX. He doesn't exist on the internet.
You look up Sequoia stuff, there's a picture of Gary Wang of his back facing a computer.
Gary Wang is the same CTO or the Chief Technology Officer of FTX?
Allegedly.
So as you dig into the layers, we don't know where the original money that they started FTX Alameda came from. This guy, Gary Wang, may or may not actually even exist, or might not even be his real name. And even better, their risk officer apparently started a poker scam site where they were known for cheating against their own player base on the poker website.
Hired a chief regulatory officer who was part of a card cheating scandal, and his name is Dan Friedberg. And if you hit up Dan Friedberg's LinkedIn, there's no mention of his time at the poker site. To be head of regulatory at FTX and have this in your past and cover it up.
Now, when you piss off millions of crypto traders around the world and defraud the biggest and most powerful investors across the world, the truth starts to come out and everyone starts to combine their hive brain and their research abilities to dig in and figure out what the heck is going on. What's utterly crazy is the day that FTX declared bankruptcy, Gary Wang submitted multiple code contributions to the FTX GitHub code repo. That's the same day of the hack and that the database was wiped. It's the same day that malicious links went out to all FTX users. What? So Gary Wang, we don't know if he's real, we don't know if he's fake, apparently submitted code the day that FTX went under and the major hack happened, as well as a database exploit, as well as the regulatory officer has a shady past of cheating against their own customers. Again, it was well known that FTX was doing this exact same game, cheating against their customers and using Alameda to trade against their customers, seeing all of their positions and knowing exactly how to win.
Sean, all of that is obviously a giant mess. And in your opinion, do you think this overall, this FTX story, does this hurt Bitcoin? Does this help Bitcoin? Is it a little bit of both? What happens here?
Well, I think there's going to be some short-term pain and people are going to be afraid of it from entering into Bitcoin. But, ultimately, I think it's definitely a good thing. I think one of the big things that, there's so much to cover in this story of fraud that it's hard to get it all in. And even a 3-minute clip like that, one of the biggest things that hasn't been touched on yet is that they held 0 Bitcoin, right? And so they had all these customer Bitcoin deposits. They owed their clients, I can't remember if it was 15,000 or 50,000 Bitcoins, but it was billions of dollars. And what that means is that they were taking money from people. Someone was wiring them, say, $10,000 to buy some Bitcoin, executing a buy on FTX. And FTX wasn't then going and using that to buy actual Bitcoin. They were just taking the money and sending it to their trading account and trading it on leverage on some other coins. And so what that amounts to is BTC price suppression. So the Bitcoin price has been suppressed by these fake deposits. People were trying to buy Bitcoin that should have pushed the Bitcoin price up. And by creating these fake deposits, they were able to suppress the price. And so I think ultimately taking a player like this out of the market is going to make it harder to suppress the price of Bitcoin. And in the long run, that's obviously good for it. Yeah, no,
I agree. I think, obviously the bear market weeds out a lot of these bad players and bad money. And I just want you to make the point here, Sean, because we did this on the last show. And so there might be some people listening to this show who didn't listen to the last one. Despite all this bad stuff happening with FTX and these exchanges, these are third-party entities. They're centralized exchanges, and these are just criminal actions from people who were with the company. So remind people it's not necessarily Bitcoin or Bitcoin's network that is in jeopardy or in trouble here, because value proposition is still here, still works, everything's kosher. Because I've been getting a lot of phone calls. I'm sure you've probably gotten some phone calls about people being like, "Is everything okay with Bitcoin? Or are you whole, Matt?" And I'm like, "Yes, this is all FTX related. I don't keep my money on exchanges, and I never used FTX."
That's right. Yeah. I mean, same for me. Nobody I know was using FTX because I would never send anyone there. But yeah, as long as you keep your Bitcoin in self-custody, it's a total non-issue. It's just an entertaining event. It's kind of mixed a lot of sadness and laughter. I think on the one hand, like I said earlier, we've been calling this guy scam bankster fraud for years now, and we've known this was coming, and so it's kind of funny to see everything play out and to have been right and all that. But it's also really sad, right? Because you've got real people getting scammed by this guy, and that's terrible.
Well, we've got just probably a minute or two before we got to go to break. Do you think this changes the timeline for the next bull market, or are we still on course?
I think the bull market has nothing to do with this. I think
Okay.
the bull market is although to some extent the kind of last leg up was definitely held a little lower than otherwise would have been by the price depression of places like FTX. But ultimately, it's just a factor of Fed liquidity. If the Fed's quantitative easing, then credit creation is growing around the world, money's getting printed, and that's going to provide liquidity, and that's going to help all assets. And when they're tightening, they're shrinking the money supply. The interest rates are going up. That's going to hurt credit creation around the world, hurt the supply of money, and that's going to hurt risk assets.
That's right. And I just want to remind you guys, if you're listening to this show and you know what, you're kind of intimidated by this space, but you want somebody to kind of hold your hand so you don't get caught up in stuff like this, well, you can always go to my website, mattjmoore.com. That's Moore with 2 O's, mattjmoore.com. And I'd be happy to chat with you. Send me a message. We can set up a consultation. I don't give financial advice, but I can definitely teach people how to fish.
And we're going to take a quick time out. Fish sounds good. Now I'm hungry. Thanks a lot, Matt. I'm teasing. Quick time out. You're listening to Cryptocurrency with Matthew J. Moore on 102.3 KRMG Tulsa's News and Talk. Welcome back to Cryptocurrency with Matthew J. Moore. I'm Russell Mills. Today we've been talking about the FTX scandal. Can't call it anything else. It is scandalous, and it is huge, and it is going to take a while to sort out how, $32 billion just basically disappears overnight. But trust me, they'll get to the bottom of all that. Meanwhile, they made a really great point during the last segment. I hope you were listening. Bitcoin wasn't actually involved. Literally not involved, right? Because they didn't actually hold any Bitcoin. They told people they did. I think that's just a key point that more people need to tune into, Matt. And there is our host, Matthew J. Moore. What do you think?
That's true, and that's why there's a big difference between a lot of these speculative assets and Bitcoin, and there is differences, and that's why we like to talk about it on the show. That's why we focus on Bitcoin. It's definitely more the conservative play here, but it's definitely got a lot of staying power. And in my opinion, it's the perfect form of money. But we got a long ways to go and a lot of education to do, and that is again why we do this show. But if you missed the last few segments, we've been chatting with my favorite Canadian and Bitcoiner. He is for security reasons, we're just going to call him Sean. But hey, guess what? We're soon going to bring him to Tulsa, so that's cool. We've been discussing the last few segments about these revelations about the FTX exchange and how deep this black hole really goes, because it does kind of seem like that. But to be honest, I wouldn't have, I wouldn't be able to unpack this story if it really wasn't for our awesome sponsor. This show is made possible because of them. And Get Hedge is the name of the sponsor, and that is who brings you this show every Sunday. So my question to you is, do you have a strategy to obtain Bitcoin on a regular basis? Do you plan to automate your dollar cost averaging? What about getting all or part of your paycheck in Bitcoin? Well, Hedge is revolutionizing how you get paid. Hedge makes it easily to automatically convert your pay into Bitcoin. Whether you're an employer or employee, you can get started in 4 easy steps. And Bitcoin, hey, like I said, it's a long-term play. Start a strategy today. Hedge is here to help you make it easier to stack those sats month after month. So what are you waiting for? Start living on the hedge. Check them out at gethedge.io. Again, that is gethedge.io. And here is how you can qualify for the $200 worth of Bitcoin that I will be giving away. Whether you're listening live or later, you can still qualify. If you go to my website, mattjmoore.com, and scroll down to that resource section, you'll find a button that says Get Hedge. Click that and sign up for Hedge and start having a portion of your paycheck allocated into Bitcoin, and it can be as little or as much as you want. Using Hedge, here's the cool part. You can skip the exchange experience altogether, and you can have your Bitcoin sent directly to a self-custody wallet that you want. So I highly recommend that process. And Hedge, they're going to give me a list of emails of those who signed up, and I'm going to draw a lucky winner. So for that, what are you waiting for? Go to my website, mattjmoore.com. All right, Sean, let's continue this. We got a couple more minutes before we close out the show, but I want to thank you for joining us today because it's really has been mind-blowing about this FTX exchange story and its possible implications. For those who, enjoyed what you had to say today, where could they follow you and your work? We there? Oh, maybe we lost him. Well,
no, you've got me here.
Okay.
Sorry.
No,
you can find me at Twitter at BTC Plebeian, but the best place to find me is going to be at the Tulsa Bitcoin meetup. It's always more fun to talk in person, dive deep on this stuff. Show up there. There's lots of great people. You, Charlie, Andrew.
Right.
People who are really knowledgeable. If you have any questions and want to learn about Bitcoin, we're more than happy to help you out.
Well, here's kind of my final question about this FTX story. It seems to me that a lot of very important people either missed a lot of these red flags or basically turned a blind eye due to other reasons. Was this an issue of regulation, or was this just bound to happen anyways? What are your thoughts?
I don't think regulation is going to help at all, personally. I think the great financial crisis makes that very clear. I think it's really easy for fraudsters to stay one step ahead of regulators. Even in traditional markets, it's even easier in the world of crypto scams. And so I don't anticipate. And I've got my own hesitation about even the currently regulated entities like DCG and Coinbase. I'd be surprised if they're fully reserved, to be totally honest with you, and they are regulated. So, I'm hesitant to embrace regulation. I don't think that's ever going to be the solution. I think Bitcoin is a naturally self-regulating system. There is no one to bail you out. So if someone goes under, the federal government couldn't have stepped in here and printed that Bitcoin that FTX lost for depositors. There's just no way to do it.
Right.
So that's ultimately, this is the free market in a really pure way, kind of cleansing itself.
Yeah, no, I agree. And then if you looked at that Vox article where Sam's direct messages were published, he was actually saying some of the same things you were saying is like, yeah, regulators are a joke. You can just stay in front of them. So,
and look at their executives. They're all former regulators. Like these people,
Right.
It's just a revolving door between the regulators and the big scammers. They're not the answer.
Well, and there's definitely some suspicious relationships that we uncovered in the last episode. But hey, we did this to Charlie and Andrew. Finish this sentence for me, okay? Bitcoin is inevitable because
it's an idea whose time has come.
I like that. That's really good. Okay, I'll take that. Well, guess what? If you're late tuning in for this episode, hey, don't forget to listen to this recording once again because there's a lot of information on it. You can check it out at all major podcast platforms. And we really want you to keep tuning in every Sunday so we can educate you, keep you safe, hopefully, and give you some information that just might change your life.
And hopefully might help you avoid some of the pitfalls that led people to lose money in this deal, because one thing they talk about here a lot is self-custody. If you don't know what that means, go check out some of those prior episodes and come back here next Sunday because we'll be here at 5 talking about crypto with Matthew J. Moore on 102.3 KRMG, Tulsa's News and Talk. See you then.